Bonjour à tous.
Hello, everyone. Happy Halloween. I call this meeting to order. Welcome to meeting number 143 of the House of Commons Standing Committee on Industry and Technology. Before we begin, I would like to ask all members and other in-person participants to consult the cards on the table for guidelines to prevent audio feedback incidents. That will protect the health and safety of everyone, especially our interpreters, whom we thank warmly. Pursuant to the motion adopted on Thursday, September 19, 2024, the committee is resuming its study on credit card practices and regulations in Canada. Pleased to welcome our witnesses today from Agri-Food Analytics Lab, Sylvain Charlebois, Senior Director, Agri-Food Analytics Lab, and Professor at Dalhousie, with Samantha Taylor, Senior Instructor of Accountancy and Information Science, Dalhousie as well. From the Office of the Superintendent of Bankruptcy, Elizabeth Lang, Superintendent, with us by video conference. Thank you for being with us so early on a Thursday morning. You will each have 5 minutes, so without further ado, Mr. Charlebois.
For inviting us this morning. I'm accompanied by my colleague Samantha Taylor, who's an expert in accounting, which is not my area of expertise. I haven't done a whole lot of research on credit cards in my career, so I thought that Ms. Taylor's presence would be appropriate for this testimony. The expansion of the buy now, pay later options in Canada, notably through platforms like Apple Pay and providers such as Klarna, has implications for consumers who may already be facing financial strain. Through current regulations don't address PNPL for essential items like food, I would recommend restricting PNPL credit options specifically for grocery and food purchases, either directly at the point of sale or indirectly through digital payment intermediaries. Such a measure could help prevent Canadians from incurring additional debt on essential items. While I have reviewed key government sources, including the Code of Conduct for the payment card industry in Canada or the Financial Consumer Agency of Canada, there appear to be no existing restrictions on using PNPL for groceries or restaurant purchases, underscoring the need for action in this area. In addition, social media's influence on consumer perceptions cannot be underestimated. Generation Z and millennials increasingly rely on social media for news consumptions, diverging from older generations who prefer traditional media like print and radio that really affects their behavior. Of concern, we've seen campaigns promoting grocery boycotts and even social encouragement for shoplifting. To address the potential influence of bots and coordinated misinformation, which may disproportionately affect younger Canadians, I recommend considering requiring social media platforms to implement a verification system for users on online platforms to prevent manipulation of Canadian consumers by automated accounts. Additionally, agencies like the Financial Consumer Agency of Canada can use social media to share credible, engaging content such as short videos, boosting financial literacy where younger Canadians are most active. And I do want to underscore the fact that financial literacy is a big issue in Canada right now. At this point, I'd like to pass it to my colleague, Samantha Taylor, for the remaining of our opening remarks.
Thank you, Sylvain. Thank you, Chair and distinguished committee members. I am Samantha Taylor, and I am here to offer insights about financial technology, social influence, and food security. The rise of Buy Now, Pay Later, BNPL, is becoming increasingly popular in Canada, offered through platforms like Apple Pay and Klarna. It appears that current regulations do not prevent consumers from using such mechanisms to purchase food. With these additional credit offerings, Canadians may be inadvertently increasing their consumer debt. To address this, I recommend introducing regulations to prevent BNPL purchases for food items in possibly restaurants, either directly or indirectly through third-party platforms. Next, I'd like to discuss social media influencers and their effect on consumer behavior and perception of food security. Campaigns by influencers, even with positive intent, can lead to price volatility or encourage illegal activities like shoplifting. Further, Gen Z and millennials are more likely to consume news online, especially via social media, as compared to older generations. Notably, Gen Z is just as likely to trust social media and professional journalists versus older generations who prefer professional journalists. To counteract this, I propose exploring user verification measures for social media platforms operating in Canada. This could prevent autonomous accounts, bots, which can drive misinformation campaigns. Additionally, I recommend agencies like the Financial Consumer Agency of Canada to consider mobilizing their content via social media to meet younger Canadians where they are. Lastly, a greater number of Canadian consumers are ordering and paying for groceries online. I recommend considering introducing restrictions against online grocers, saving consumer credit card information to protect them from data breaches. By proactively addressing these technological and financial risks, we can better support Canadian consumers in managing their finances and ensuring stable access to food. I look forward to discussing these recommendations in detail. Thank you.
Merci beaucoup. Je passerai maintenant la...
Thank you very much. And Mr. Lang, the floor is yours. Ms. Lang, rather.
Thank you for the invitation to appear as a witness today. I will deliver my remarks in English in order to avoid any technical difficulties. Today, I'll provide a brief overview of the insolvency system in Canada, and I'll touch on some information and data that I thought might be of interest to you in relation to the current study. And then I'll be happy to answer any questions you have in the language of your choice. Before I begin, I'd like to share an important perspective regarding policy challenges and insolvency. Policy challenges generally don't originate in insolvency laws. They have a light shone on them via an insolvency, but the problems almost always lie elsewhere and should be addressed at their root. Trying to fix problems in insolvency is ineffective for the core problem and can upset the delicate balance that is necessary for an effective insolvency system and/or negatively impact credit in general. Trying to fix problems in insolvency is like trying to save a plant by addressing the flowers only. If you do that, both the flowers and the plant will die. So turning briefly to an overview of the insolvency system in my office for context purposes, a well-functioning insolvency system is a key pillar of the economy. It helps promote investment and creditor confidence in the Canadian marketplace and allows honest but unfortunate debtors a fresh financial start. As superintendent, a governor and council appointee, I have statutory duties and authorities that I carry out at arm's length to the government, which help ensure that the Canadian insolvency system continues to operate as intended. My office is responsible for overseeing all aspects of the Bankruptcy and Insolvency Act, as well as certain aspects of the Companies Creditors Arrangements Act. I license and regulate the insolvency profession, ensure an efficient and effective regulatory framework, supervise stakeholder compliance, and maintain public records and statistics. I also have directive-making power that enabled me to provide additional direction on the legal requirements of the BIA. My office has the lead on regulatory changes, while the Minister of Industry has responsibility for insolvency legislation, and we work very closely with the department to try to ensure that operational realities are considered in any policy changes. The OSB, as a VoteNet organization, is almost entirely funded by stakeholders, whereby levies and fees cover almost all of our direct and indirect costs, with only a small appropriation. In addition to the OSB, key players in the insolvency system include licensed insolvency trustees, debtors, creditors, and provincial courts. Stakeholders in the insolvency system have rights and responsibilities and can be subject to consequences if they fail to fulfill their duties. I want to note that there has been a lot of attention paid to insolvency trends and the increased number of filings of late. To put that in context, we have not yet seen consumer insolvency filings reach the number we saw prior to the pandemic. In 2019, there were just over 137,000 consumer insolvency filings. The numbers dropped significantly during the pandemic lockdowns and have only more recently been rising. In 2023, for example, there were just over 123,000 consumer insolvency filings. And it's worth noting that we saw the highest number of filings in 2009 during the recession, when we saw over 151,000 consumer insolvency filings, with a note, of course, that Canada's population has grown since then. It's also worth mentioning that in 2023, Almost 79% of those filings were consumer proposals, which is an option that allows debtors to retain their assets and pay an amount agreed upon by their creditors, usually over a period of time. Consumer bankruptcies are only occurring in about 21% of the cases and are more likely to be an option for debtors who have little or no ability to repay the amounts owing. On the business insolvency side, we have seen filings increase steadily since the lows in 2021 and 2022. In 2023, there were 4,810 business filings, which is the highest number since 2011, but still not as high as the filing numbers seen in 2008, 09, and 10 following the recession. My office's role with respect to credit card practices and regulations is limited, as an insolvency occurs at the end of the lending cycle, and only a small fraction of credit card holders in Canada file an insolvency each year. However, we do collect insolvency data, and I thought I could share a few relevant data points. Debtors have to report all liabilities on their statement of affairs at the start of any insolvency, including any credit card debt. In 2023, 87% of insolvent consumers reported at least one credit card in their liabilities, with an average amount owing of just under $18,000. And this is pretty comparable to 2019, prior to the pandemic, where we saw 89% with one credit card, with debt averaging close to $20,000. In terms of the reasons for financial difficulty, this is an open text field, so it's not perfect to provide data. But what we can see is that in 2023, around 0.79% of those filing bankruptcies and proposals self-reported that credit cards are the reason for their financial difficulties, which is about the same in 2019, which was 0.95%. And then on bankruptcies, we also collect the licensed insolvency trustee's perspective on the cause of bankruptcy at the end of the bankruptcy. And in that case, overextension of credit was reported as a cause of bankruptcy in 11.68% of consumer bankruptcies. In terms of demographics, consumers aged 35 to 49 made up 37.5% of insolvency filings in 2023, which is about the same as 2019 and is the largest percentage share of all age group. I'll conclude by highlighting just two last things. First, consumer debtors in Canada are required to participate in 2 insolvency counseling sessions in accordance with standards established by my office. These sessions are supported by an online curriculum and are designed to promote debtor rehabilitation in support of a fresh financial start. One of the modules deals with responsible use of credit and covers topics like borrowing and managing the use of credit and debt. And finally, my office has been working hard in collaboration with partners to provide helpful information to debtors so they can make the best choices to deal with their debt. We publish an online consumed by debt brochure in 13 languages. We have an online debt solutions portal, an AI-empowered debt questionnaire. We've issued consumer alerts, and we have been undertaking multiple social media campaigns to get the word out to consumers. This concludes my opening remarks. Thank you once again for the invitation to be here today.
Thank you very much, Madam Lang, for this very interesting and thorough presentation. Appreciate it. And now to start the discussion, we'll turn the mic over to Mr. Perkins for 6 minutes.
Thank you, Mr. Chair, and thank you, witnesses. And in particular, it's always great to see a fellow Nova Scotian here before a parliamentary committee, Professor Charlebois. Thank you for coming, and for coming in person. Maybe I can start with Professor Charlebois. Professor, we know that we have record food bank usage in Canada, over 2 million people a month using food banks, a level we haven't seen in decades. And we know that credit card debt in Canada has increased about $30 billion since 2015, a per capita increase of credit card debt of about 20% since then. And in any given month, we know that roughly about half of Canadians, according to the Bank of Canada, don't pay off their credit card debt. And a recent poll by Harris, done this year in 2024, found that the reason that people have changed their credit card habits as that debt has increased, that they cite, is because prices of goods and services have gone higher. In essence, using credit cards to pay for everyday purchases, according to this thing, like food and things that you would normally not use credit for. So I know that we've talked about the cost of living as an impact on the issue of rising credit card debt. And so as part of that, food is being part of that, people buying credit cards, using credit cards to buy food. The basket of food that Canadians purchased in April 2021, if they bought $100 worth of food, it now costs about $121 of food over that time, which is why people are feeling the pinch. So I'd like you to comment a little bit about, if you could, about how much the carbon tax is impacting that increasing food pricing, which is increasing the use of credit cards for purchasing food and therefore credit card debt.
Mm-hmm. So I've actually addressed this issue several times during my visits in Ottawa, and to fully measure the impact of the carbon tax on retail prices is extremely difficult to do. Which is why our lab has focused on wholesale prices and up the food chain more. And we've always believed that the carbon tax may impact our agri-food sector's competitiveness. Because retail prices can be affected by several factors. Promotions, consumer behavior, the weather. I mean, a lot of things can actually impact prices, especially with dynamic pricing coming in with AI. We're seeing more prices fluctuate on an hourly basis now. So it's hard to correlate a policy affecting the entire supply chain with retail prices. But I would say, I mean, some of the policies that are pushing prices higher are taxes at retail. And I've advocated for the elimination of all taxes on many food products. Because of shrinkflation, there's an increasing number of products that are being taxed at retail, and many of them are healthy options. And in the Food Bank's Canada report this week, the Hunger Count, it was suggested to eliminate retail sales, and I support that.
So as a person who's, before entering elected office, spent 20 years in retail, I know a bit about what does push up the price, both that a retailer pays and then how it's priced in. And one of the things I know from that business is that when you actually put a tax on the production of that food product, which happens when you're requires energy and other things to produce that product, the carbon tax increases that production cost. And then everything has to be shipped. One of the most expensive parts of selling things at retail is actually the transportation of the goods. And when you increase the tax on fuel with a plan up to 61 cents to quadruple the carbon tax, that increases, obviously, food costs. All those things increase the price that the retailer has to pay, and then the retailer has to pay tax, obviously, the carbon tax on the energy and other aspects of running their retail store network.
Yep.
So doesn't that all compound and create a higher food cost for people, which is causing financial stress?
What the evidence is telling us, if you look at wholesale prices and retail prices in Canada versus, say, the U.S., the gap is incredibly narrow. So there's just no room. And wholesale prices have increased almost 40% more than American wholesale prices. I'm talking about food here. In the last 5 years. Wow. Okay. In America, in the United States, when you look at Kroger or Albertsons or even Walmart, their food division, that gap is significantly higher. So when wholesale prices go up, they do have room. In Canada, most grocers, and I know a lot of people like to blame grocers for exaggerating and profiteering, but we just don't see the evidence. When wholesale prices go up for a variety of reasons, and perhaps the carbon tax may be part of that equation, grocers have no other choice but to push prices higher to protect margins.
Thank you. If I could ask a question to our online witness on bankruptcy. In your opening, you mentioned, Ms. Lang, that the extension of credit is the number one reason cited in a lot of insolvency. And one of the things that we've questioned the banking and other witnesses on here on the credit card study is that they provide other options if people get overextended on their credit card debt. And usually that means transferring them to a line of credit. When some of us have pushed, what do you do with the credit card? Obviously, they don't eliminate the credit card. So when you see these bankruptcies, do you see a combination of growing personal line of credit debt combined with growing credit card debt?
So just to clarify, I think what my opening suggested was that the cause of bankruptcy being connected to credit cards is actually a very, very low percentage. It's under 1% of cases. Noting at the same time that this is not perfect data. It's an open text field that's answered by the debtor and completed by the licensed insolvency trustee. The number one cause that we've seen is loss of income. The number two cause is medical reasons. So to answer your question about credit cards, lines of credit, and the various types of credit, we would have to go back to our data and see if we can help answer that question. It's a bit complex because, again, these are not closed text fields, but I could see what I could provide if you'd like.
Okay. Professor Charlebois, can I ask again that we're seeing some very disturbing things around millennials? Well, maybe this is more appropriate for Ms. Lang. Because in the credit card debt issues, we're seeing, according to the poll of Harris, that millennials and Gen X are the ones that are seeing the highest increase in stress, financial stress, and credit card debt, rising faster than others, presumably because of mortgages and the increasing cost of mortgages and rent. Have you seen any particular trends around those issues yourself that are reflected in the Harris poll about the connection on age, demographics, mortgages, and credit card debt?
So I can tell you that the last data that I saw suggested that under 20% of people who file for an insolvency actually own a home. So we'll keep a close eye to see if that changes. That may with the current interest rates. But the age 18 to 34 demographic in 2023 was 26.5% of the filings and actually decreased from 2022. I haven't looked at 2024 trends yet, but it's usually in that 26% range.
Merci beaucoup, Monsieur Perkins. Monsieur.
Thank you, Mr. Perkins. Mr. Ari, the floor is yours.
Money is actually an eye-opener for me. I was not aware a lot of things that you mentioned in your opening remarks. Please do send us the trend in insolvencies and bankruptcies over a period of last 5 to 10 years, if you can, so that we can appreciate you brought out a lot of numbers. Reading it will be much more easy to comprehend than listening to it. One thing I should say that I really like the funding model of your agency. Usually, whenever the witnesses come from various agencies, first thing they ask is that we need more funds. So I'm glad to see that your requirements you're meeting through your own sources, which is a good thing. I have a couple of questions to you, if time permits, but I will come back to you later. Professor Chalbis and Ms. Taylor, this buy now, pay later, you mentioned that it adds to the additional debt. It incurs additional debt for consumers. How many consumers, what percentage of consumers do you think are incurring unreasonable amount of additional debt due to this BNPL?
Thank you for your question. It's really too early to tell. So first off, I just want to ask, buy now, pay later. Are we all somewhat...
No, 1 minute. So you don't have evidence because Professor Chalbus, while answering a previous question from a colleague, several times mentioned what he has seen in evidence, what he has not seen in evidence, etc. Do you have any evidence that consumers, if so, how many consumers are getting problem due to this particular scheme?
Thank you. The latest evidence here has that 20% of UK cards have one BNPL data on it. Disproportionately, 84% of the overall transactions are ages 18 to 49. Now, I state UK data because that is the only data that's available right now. It's emerging from a 2023 study.
So, but that data doesn't say that 18 to 49, they're incurring debt more than what they require. My problem is that when people come and propose we need to pass new legislation, new regulations, just to safeguard the interest of, say, 5% or 10% who are incurring, we are creating a red tape which affects 90% of the consumers. So while the regulations, for us, it looks sound good, it looks great that we are trying to regulate, we are trying to manage the affairs of individual Canadians, that is a nanny state. So my thing is that, please, when you propose new regulations, you have to come out with a study that shows that how regulation helps the people, number of people it helps, and how it does not create red tape to the other people.
I appreciate that, and I really wish we had the data.
Then without data, you are recommending that we bring in the regulation. That is the problem I have here.
Sir, I'm suggesting that we look at leading indicators that suggest that this is an emerging field that can cause compounding debt later down the line.
The emerging fields, we don't know whether its effects are good, bad, or ugly in technology. Like AI, if you listen to one portion of the people, they say that, oh my God, AI is going to destroy everything. There's another set of people who says that AI is going to improve the lives of Canadians and other people around the world. However, just because something is emerging, we are not sure at suddenly, because I respect you, because the organization you come from, you're educated people, when you speak, we policymakers have to listen. But my thing is that you start with the proposal that bring in regulation. That is the issue I have here.
Thank you.
So I appreciate the question. We came here today to propose ideas, okay? Now, these ideas are likely deserving of more exploration and research, okay? We don't have the data, and I think we should have the data. These new technologies are making money invisible. And when money is invisible, the younger generations in particular, and the research is suggesting that, they don't necessarily understand how they're spending their money and how in trouble they get very quickly.
I agree with what you start saying, that you are coming with ideas. That is exactly what we need. What I was not happy, what I was concerned is that you started with that you have to bring in regulation. It's something new. It's making invisible. Now everything is invisible. I am spending more because it's very easy to spend online. So anyway.
But you're implying that we're asking for more regulations.
You stated that you want regulation.
But doesn't necessarily mean that we actually are, that's the outcome that we're actually going to be looking for. There are probably other options that we could actually entertain as well.
Yeah, as and when the evidence comes, please do come. We need to know. It's also our responsibility to look into, to instigate reports like the committee can do a study understanding this particular problem more, gather more evidence, and the committee can suggest the government to bring in necessary legislation or regulations or whatever it is. But I was concerned that organizations, people like you coming in and asking directly to bring in new regulation is a problem for me. Ms. Lang, you did mention that the bankruptcies and insolvencies have not gone back to pre-pandemic level. I did hear also you mentioned compared to the levels of bankruptcies in 2009 during the financial collapse. How does that the current numbers compare with the numbers then?
So we haven't yet reached the numbers then, either on the consumer insolvency side or on the business insolvency side. So, in spite of the fact that the population is continuing to grow.
So the rhetoric that we heard even from other witnesses today that, oh my God, people are getting too much of debt, they are getting into problems, we'll have to protect them, we'll have to bring in new regulations, etc. I think it's somewhat misplaced in my view. What do you think?
I think that insolvency numbers do not suggest the need for that. Do we have consumer spending issues? Do we need better financial literacy? I would say probably yes. And one worry I have is whether there's a proportion of the population that is, as I say, too poor to go bankrupt, given the costs to file an insolvency. And so that's a worry for me.
I agree with you that literacy is the best tool. Education is the best tool. Thank you.
Just a quick question, Madam Lang. You just mentioned too poor to go bankrupt. How much? What's the average cost to file
the average cost that we hear about for a straight bankruptcy? This is for the lowest income Canadians. Would be about $1,800.
Thank you. Monsieur Garon, la parole est à vous.
Mr. Garon, the floor is yours. Thank you, Chair, and thank you to all our witnesses. We appreciate your presence in spite of the technical problems. A quick follow-up on the question by my Liberal colleague on Buy Now, Pay Later. The purpose of this study is to see how credit card companies are behaving and try to assess whether consumers are well aware of the ins and outs of the financial products they use. We've listened to bankers and all kinds of businesses. It is a market where some consumers are vulnerable. I'm not questioning that. But I confess I was surprised to hear in the testimony that there's so much buy now, pay later. I see that occasionally when I go to a furniture store. I see it for tiles or central vacuum. But what we're hearing from you now is eat now, pay later. When I go to IGA in my riding and I see an automatic cash, there are all kinds of options about cards and donations. But I've never been offered the opportunity to pay in 6 installments or 36 installments. Which grocery stores offer this? All grocery stores. It's an app. In fact, it goes through an app. But I will let Ms. Taylor tell us more. Well, I'll finish my question first. You say this is done through an app because we've had the financial technical companies here. So do the fintechs who don't want to be regulated, I mean, they said clearly they don't want any kind of regulation. Are you saying that fintech applications can make consumers even more vulnerable by providing options that credit cards don't offer? Is that the problem? It's very, very easy to spend with all the technology available. But grocery chains accept payments through all kinds of means. There is the eat now or buy now, pay later option using new technology that's now available. And you're saying we don't have enough data or any data. I would ask Ms. Taylor to answer that one.
There are emerging deals. So, for example, Klarna announced that they will be joining with Apple Pay. So it's when I talk about, considering direct or indirect, whether or not it's, directly you click Klarna or another, Afterpay. I know for myself, when booking the flight to come here, I saw Uplift, which was a new feature that I never noticed before. It was pay in 4 installments, except this wasn't 4 installments of my bill divided by 4. It was grossed up and then a bill to be paid. Yeah.
La réponse est intéressante parce qu'on a reçu les fintechs.
That's an interesting answer because we heard the financial technical companies. They said that the problem was credit cards, which were manufacturing client services. So it would be very interesting to talk to them again about these new options. I'll go to Ms. Lang, since we don't have much time. When credit cards are used as financial tools to borrow money in the longer term, they seem to be quite toxic when used in that way. In Quebec, we believe that 23-24% interest, as we see on credit cards, is practically organized crime rates. These are almost loan shark rates. They're beyond usury. This is not a scientific observation, but it's mine. But I notice that banks who are advertising credit cards much more than they are any other products that might be better suited to customers, like personal loans or credit lines at lower interest rates. I'd like to know, well, here's my question. For some toxic products like alcohol, lotteries, cigarettes, we have mandatory education programs that come along with a purchase. Shouldn't we have that kind of education for credit cards? Shouldn't we somehow oblige credit card issuers and banks to provide less expensive products to their customers if they are taking on longer-term loans? Thank you for the question. If I may, I'll answer in English so that I can make sure that I give you an accurate, complete, and comprehensive answer with all the nuances you need.
It's a bit outside of my wheelhouse to speak to what banks should offer. What I can tell you from our experience and complaints that we receive is that high interest creditors can be very aggressive, both in their marketing and in their collection behavior, including ignoring the stay of proceedings that happens when you file an insolvency, and in some cases being so aggressive that people have been fired from their jobs because they've received calls every minute from these collectors. In some cases, these people are outside of Canada, mind you. But my opinion personally, going outside of my wheelhouse, would be that there is a need for access to low cost borrowing for some of these Canadians. If you need to buy now, pay later for food, that might tell you something about their ability to buy food, right? So to me, that's a bigger policy question.
Évidemment, vous dites, bon.
You're saying that this is a bit beyond your ambit. You're saying that if people were better educated financially, this would make your work easier because you'd have less work. And we would love you to have less work. I think you too would. Let's take cigarettes as an example. We forget. We have obliged the tobacco companies to be part of the education mission. We put warning messages on cigarette packs. So to what extent should banks and credit card issuers themselves be a part of the education effort, the effort to educate consumers, in your view?
International colleagues in Australia, for example, I believe that the option that might be worth considering is a interest test. So where lenders have to consider whether a product is in the best interests of the borrower.
Juste une petite question. Merci, Monsieur Garon.
Thank you, Mr. Garon. Does that work in Australia? Are there other countries that we could look at as well, which have clear warnings about the risks of these financial products, for example?
Australia stands out for me through speaking to my colleagues. There was a Haynes Commission. I think it's a version of what you're doing here in the committee, but much more extensive. And that has had a lasting effect on creditor behavior in Australia, from what I understand.
Merci beaucoup. Monsieur Massé.
Thank you. Mr. Massé?
Good questions from Mr. Garon. And, it's interesting because my credit card, when you talk about labeling on cigarettes and other things, my credit card has an inducement to use it more by getting points and getting things, advertising on my credit card to do it. And perhaps one of the recommendations I've been thinking about is there should be a warning label on a credit card that says reminder about debt or something like that, some message that you pull out for financial literacy. Because, really it's shifted to try to induce you. So I really appreciated Mr. Garon's questioning, and I'm interested in that Australian study as well, too. Ms. Lang, maybe it's because I'm left-handed, because I see things differently or have to operate in this world differently than most people. But it seems Mr. Badaway's making fun of me, which is fine. So, but the thing about the notation about credit cards causing bankruptcy. So when I talk to small retailers and people, later on they don't view the credit card causing them the bankruptcy, but it's part of their bankruptcy. So they either got into debt, or their business model wasn't working, or they extended themselves too much, or they, sadly, like you've noted, they've got sick or lost a job. So they don't view the credit card as a cost or the reason why they're in debt. Whereas then you mentioned as well that it's part of 87 to 89% of actually the bankruptcy costs. So what do you think about that perspective, in the sense that, it may not be the thing that triggers it, but it's the cumulative part later on that is then noted as part of the bankruptcy? That seems like a high number. If everybody basically going bankrupt almost has a credit card, that seems to me it's part of the problem, not the solution of the equation for the person.
Well, first, let me reiterate the idea that the causes of bankruptcy field in our data is not a perfect field. It's an open text. It's a self-reflection. Secondly, I would say I almost thought 86% was low. I don't know many people that don't have credit cards these days over the age of 18. And so it's difficult for me to answer whether that's a cause. It is often there, but difficult to say that that's surprising.
Data have what type of credit cards people had, like, and also the interest rate. This is part of the problem that we're, and one of the reasons I brought this up in the committee is like you have like grocery stores now, but also too furniture stores, 30% credit cards. Then we had, you know, almost like the lack of competition in the sector that's been noted here with a lot of them at 20% and so forth. Do you have any data in terms of what cards and percentages of interest bankruptcy people were paying?
So a creditor field is also a sort of an open text field. So we would have to search by creditor name. And then what is reported to my office is the total amount of debt owing and not the breakdown of the interest and principal and any additional fees. And I'm not sure if that's something that licensed insolvency trustees get with their proofs of claim that have to be submitted. They may get from some, but not all. It could be somewhat inconsistent in terms of reporting.
It's just odd that we can't seem to get a lot of that information, also the net income that the companies are making, and meanwhile have difference of a 10% compounded interest rate between a 20% is quite significant. And so it's just almost shocking to me that nobody gathers any of that data, even in a field of bankruptcy, because you know, there could be solutions for that. I'll move over now to our guests here. I only have a few more minutes to go in this one, but you know, buy now, pay later really is the definition of a credit card. And, you know, so what would you say for the credit card industry that argues that, well, we already have that, that's already us. Why not let these others into the same market? Wouldn't that be limiting competition? Because I see that as and I agree, by the way, like nobody should have to use, you know, hoping for funds later on to pay for basic substances and groceries. That's why we're doing a lot of this. But what would you say to that argument is buy now, pay later is the definition of a credit card?
First of all, great question. I commend this committee for doing the work you guys are doing, because I actually think that the problem is only going to get worse for a couple of reasons. One, we just actually surveyed Canadians in terms of how they actually pay for food these days. And if you look at some of the stats in the last year, millennials, 35% have actually had to borrow money to pay for food. Gen X is 35%, Gen Z's 46%. And the other issue, of course, is...
Could you answer the question, though? I'm sorry. Yeah. That is interesting, but I'm running out of time, and I have one other question for you.
Yeah. Well, essentially, the issue around... I'm sorry.
It's the buy now, pay later. That's kind of the argument that could be used against what you're saying on new fields that are entering into that. That is actually a credit card.
It is, yes.
Yeah. So maybe we should be restricting credit card uses among certain types of groceries or something like that, or identifying that as purchases, because that people are using a credit card because they don't have to pay for it till the next paycheck comes in.
My advice would be to make sure that they are aware of the risks using a credit card when paying for food.
Okay. And I guess with that, and I know I'm almost out of time here, what would you feel about a policy that limited interest from credit cards and lenders when they do use that on groceries? So is a tiering of that. I mean, there's a big difference between using my credit card to going out and paying for a baseball game or football game or something like that. But if you're using a credit card for milk, bread, rice, what about restricting buy now, pay later fees and margins on that from the credit card agencies and others?
In my view, food is different. Food is different, and therefore some of the policies should be different as well.
Okay, so that's yes.
Yes, that would be yes.
Okay, thank you. Appreciate the extra time, and thank you for the witness.
Mr. Massé, Mr. Patzer, the floor is yours for about 5 minutes.
Thank you, Chair. There was a comment you just kind of made there around like age demographics on who is borrowing money to pay for food. Do you want to just quickly expand on that? Do you have a report that we could table with us on that, possibly?
Yeah, actually, this report was made public 3 weeks ago. Right? It's called the Canadian Food Sentiment Index. It goes over many different things. We assess values, beliefs, behavior, and debt as well.
Okay.
And
can you table that with this committee?
Yes. It's on our website, so we can send it to you.
Yes, please send it to us, because just because it's on the website doesn't mean it'll get into the. So if you can just table it with the committee, I'd appreciate that. 'Cause I think it provides some valuable insight.
Yeah.
You talk a lot about how taxes should be removed from the purchase of groceries. Can you just elaborate on that a little bit more? Like, what specifically are we talking about? For what taxes are we talking about?
So it's often referred to as the snack tax, because often there's when you walk into a grocery store, there are about 4,600 products that are taxable. And most Canadians actually don't realize it. There's one province in the country that is looking into making sure that people are aware of what's taxable when they visit a grocery store, and that would be Quebec with Bill 72. And I testified in Quebec a few weeks ago about this bill, and I was very supportive of what they were trying to do. It's transparency in aisles, telling consumers what's taxable and what is not. Most people don't look at their receipts. The biggest issue with taxation, as far as I'm concerned, with CRA rules, is that there is an increasing number of products that are now taxable that weren't before. Granola bars is a good example. If you have 6 bars in a box, that's not taxable. 5 bars becomes taxable.
And yet, I've got 3 kids. We buy and we go through a lot of granola bars. Just about every single box of granola bars you buy doesn't come with 6; it comes with 5.
That's right. And I can move on to muffins and ice cream under 500 milliliters. Ice cream is taxable. Over 500 mil, it's not taxable. And a lot of people just don't look at their receipts. And some grocers, you need almost a PhD to understand what you've been taxed on. Some of them are actually do a better job, but some of them, it's not clear. You have to go to customer service, and I've done that myself, to really verify what you're taxed on. And that's an extra, in some provinces, it's an extra 15%. It's a lot.
Okay. You had a report back in, I think it was 2023, on when people buy food, how do they typically pay? And there was 4 or 5 different provinces where actually credit card use was higher than debit card and cash. So that's obviously a huge problem. What's leading to people to do that?
Well, essentially, it's cash flow. It's cash flow issues affecting households, essentially. And when you go to a grocery store, you tend to use whatever means you can because you need to buy food. It's a necessity of life. One of the reasons why I think this particular problem is only going to get worse is because the battleground for all grocers right now is loyalty. Because of inflation, people have now grown their portfolio of stores where they buy food now. They'll go to dollar stores. They'll go to Giant Tigers. And so grocers, the main chains, are fighting. They're trying to get people back into stores, and the best way to do that is by amplifying loyalty programs through credit. So if you use cards, you can get points, and that's why I think that that combination of loyalty and credit is going to be quite lethal for many, many consumers.
When I look at food inflation, there's a few products in specific I just wanted to pick your brain about here. One of them was actually infant formula. I think you've talked about this before. I'm just wondering, can you talk a little bit about how much inflation on infant formula has been and what that would mean for a mom or a family?
Yeah, so when you look at all grocery items, the one item that has increased the most in the last 2 years is olive oil. It's almost at 80%, but second is baby formula at 57%. And the reason why we have seen an incredible increase in baby formula prices is because we used to not manufacture baby formula in Canada. We don't. We import from the U.S., and there were 2 manufacturers in the U.S. that actually had some issues with food safety, Abbott and Nestle. And so we started to import baby formula from Europe for a while, but it really didn't push prices lower. So prices basically just increased. And now we do have a plant in Kingston, Ontario, manufacturing baby formula. It's called Canada Royal Milk. It's owned by China. They process Canadian milk, and they now sell formula at $41 for 900 grams, which is the cheapest baby formula you can find in Canada. but it is a plant owned by China. So right now, sales aren't necessarily robust. Yeah.
Okay. Obviously, today is Halloween, exciting day for a lot of kids. Shrinkflation, I mean, I've even noticed how much more I'm paying to buy boxes of candy for Halloween, but then when you look inside the packages and you see how little there is actually in there, it's kind of a double whammy, isn't it? When we look at where inflation has hit people, but then what they're actually getting for value it has shrunk. So just wondering if you can elaborate on that point a little bit.
Yeah, no, shrinkflation is a strategy. And of course, with sugar prices have gone up 24% since May. Cocoa prices have gone up 119% since last Halloween. So we were expecting manufacturers to reduce. This year, there's a double leveled shrinkflation phenomena. So you get fewer items per box and you get smaller candy. So it's expected, unfortunately. And we see that most categories at the grocery store have been impacted by shrinkflation over the years. And we're at the end of a cycle right now because of commodity prices. They're lower except for meat. We are expecting another wave of shrinkflation probably in a couple of years from now.
Okay, and then if we were to get the federal government to pause the carbon tax, even particularly on food production, but if we could just get them to pause the carbon tax, what benefit would that be for Canadians, but also for food prices?
That's exactly what I recommended to the Finance Committee a few months ago, to pause on the carbon tax to better understand how the policy is impacting food affordability in Canada. And right now, it's been very difficult. As a lab, we've been trying to assess the impact. Unless you have firm-level data, it's practically impossible to assess. But I would suggest to pause for now, just to understand, for food, just for the food chain, okay? Because right now, I do believe it's putting way more pressure on wholesale and retail right now, making the industry less competitive.
Yeah, so you said from 2019 going on over the last 5 years, food inflation has drastically risen. What year was the carbon tax implemented?
2019.
Okay. And when we look at the way it's going to quadruple in price over the next number of years here, just the carbon tax alone, does that not send the wrong signal to consumers that when we have a price on production, transportation, on energy, what that will do long term to consumers going forward? To me, I think it's actually quite obvious. I'm from Saskatchewan, right? We're an agriculture region, but we're also an energy producing region. So we got the two main components right there. So I see it firsthand on my own bills. I grew up on a farm. I know what our costs were. And I know how detrimental these taxes are and can be, because they say there's an exemption on agriculture. There is on some aspects of it, but not on all aspects of it. And even just those parts of it are devastating to producers. And when you look at the way that economics works and the trickle-down impact of who ends up paying all the bills, producers, like farmers, are price takers, and then consumers are the ones who get stuck paying the bill at the end of the day, because everything gets passed on down to the consumer. Mm-hmm. It's a double whammy. So, I mean, I guess I would end with just saying I simply agree with you.
I guess you should end because it's the end of your time, Mr. Pastor. So,
I was waiting for the question.
But I'll grab just a bit of time. I feel generous to myself in terms of time today. Thank you, colleagues. You mentioned, Professor Charlebois, that you anticipate another wave of shrinkflation a couple of years from now, just based on what?
Commodity prices go up. Typically, we see manufacturers review their costing structure. It happened in 2008 and 9, when oil went up to $147 US. A bushel of wheat was at $9, and wheat is 20% of all calories consumed on Earth. Ukraine basically pushed manufacturers to really review their procurement strategy and packaging strategy as well. My concern about shrinkflation is at three levels. One, I don't think that Statistics Canada actually properly measures food inflation. It underestimates it because it's not we don't see how it's embedded in how they're reading inflation, which is a big problem as far as I'm concerned. Two, packaging. When you buy a shrinkflated product, you're buying a mirage, and there's too much packaging being used. And 3 is the taxation issue. There are more and more products being taxed as a result of shrinkflation.
So you were saying that basically the basket of goods that's used to calculate the CPI is not taken into account shrinkflation.
We don't see. So Statistics Canada says, and we've met with them, they say that they actually look at shrinkflation and how it's impacting inflation, but we don't see the evidence.
Interesting. And so you anticipate commodities to go up over the course of the next couple of years, which would lead to another wave of shrinkflation, if I
That's right.
Correctly.
And so climate change or El Nino, the two cycles tend to suggest in our models that we're going to be seeing a new wave of higher commodity prices in 2027, 2028.
So mostly based on climate change more so than on geopolitical tensions or currency debasement around the world, or?
Well, yeah, geopolitics are a big issue, of course. But when it comes to, say, we were just talking about Halloween, sugar and cocoa. So for cocoa in the Ivory Coast and Ghana, impacted by flooding, and sugar canes were impacted by droughts. So, and beef right now is impacted by droughts.
It's very interesting because you're saying we were going to anticipate another wave of shrinkflation because of the impacts of climate change, while I hear colleagues arguing that the price on pollution is the cause of this inflation, which is kind of a bit of a circular argument, because one is aimed to address climate change. So it's just an interesting set of circumstances, I would guess, or opinions. But I'll leave it at that and turn it over to Mr. Van Bynen.
And I'm happy to have ceded a portion of my time to your questions. One of the things that I find is happening that's very popular both in Newmarket and in Aurora is the farmers market. And people go to these farmers market on an ongoing basis, and I very seldom see cash. So you're recommending that cash not be for food purchases. What would that do to the farmers markets if what your recommendation is to discontinue the use of a credit card or a debit card?
So your question is encouraging the use of cash at farmers markets, or?
No, discontinuing the use of credit cards. What effect would that have on these farmers markets?
Well, I mean, we're not suggesting to discontinue the use of credit cards. We just need to be, we just need to make sure that people are aware of the risks using credit cards, and making sure that that how they're spending their money is more visible and tangible. I mean, it's similar to the problems of tipflation these days. People are tipping, and there are lots of fuzzy regulations around tipping right now. People are tipping on taxes, and people don't know that.
But I'd like to come back to the issue of debit and credit cards, which I think is the purpose of this study, their effectiveness, the cost of putting the networks together. And it seems to me that the Bankers Association or Bankers Representation say that in the range of 80% of the cards or card balances are paid in full during the grace periods. So to me, it says that a lot of Canadian consumers, or a lot of consumers generally, are using debit and credit cards as routine payment mechanisms, as opposed to being the source of bankruptcy, et cetera. So how do you square that with the likes of farmers markets and merchants or retail or agricultural food merchants that find their sales are influenced by the availability of these payment instruments?
Yeah. I mean, first of all, credit is an important component to our food economy. It's when things get out of control, when people aren't aware of their balances, that things go wrong. And so I think it's important, like I said in my opening remarks, financial literacy is key. And so I was happy actually to learn from Ms. Lang that there is a lot of education out there, which is great, but more needs to be done as far as I'm concerned.
Okay, it's a good opportunity then to switch and ask the the Office of the Superintendent of Bankruptcy. Can you explain the primary function of the OSB and how it relates to consumer protection in the context of credit cards?
So the primary purpose of the OSB in my office is to ensure a well-functioning insolvency system in Canada. So we help to set the rules, we help to ensure people are following the rules, and we ensure there are consequences when people are not following the rules. As it relates to credit cards, we touch on that in terms of our insolvency counseling, which is mandatory, and helping people have that fresh financial start when they come out of insolvency, knowing how to better use credit. Credit is a fact of life in Canada, I think, so it's about using it responsibly. And the second aspect would be creditor compliance. So if creditors aren't following the rules in insolvency, for example, ignoring the stay and hounding debtors, even though they're supposed to stop collection behavior, that's something that we would look into as well.
Effectiveness of the current regulatory frameworks overseeing creditors, and what recommendations would you make?
Sorry, I missed the first part of your question. You were cut off.
How do you evaluate the effectiveness of the current regulatory frameworks overseeing creditors, and what recommendations would you make?
Generally, I think most creditors comply with their responsibilities. The biggest recommendation I would have, the biggest worry area for most stakeholders in the insolvency system is those who ignore the stay. And in some cases, those are subprime lenders, sometimes not even based in Canada. So I think we need better regulation over that group that is very, very aggressive.
Those are my questions, Mr. Chair.
Thank you. It would be Monsieur Guéron.
2 minutes 30. 2.5 minutes. Thank you, Chair. I'll continue with you, Ms. Lang. You talked about examples in other countries. You said what was happening in Australia. Another country I'm very interested in is Quebec. In Quebec, there have been legislative changes which will soon come into force, under which it is considered that banks, cooperatives, and financial services are required to conduct an assessment. When someone signs a new credit contract, the bank is required to report on the entity's financial ability to pay, be it an individual. They look at rent, they look at obligations. And they look at existing loans. So when we're talking about high-cost lenders or alternative lenders, the lender is obliged to provide that report to the person applying for a loan. I believe that these legislative changes should follow a real problem, which is the caliber of information provided to people using credit. Why does that not happen? Why is it, in terms of protecting consumers, particularly with credit contract, why is Quebec always at the vanguard? Do you believe that a policy like the one Quebec is putting into place would mean less insolvency files on your desk from consumers? Thank you for the question.
Why we wouldn't have policies like that federally? Would they help most consumers? Perhaps. I do worry about the lower end of the spectrum with consumers who only have access to the most risky lending products and may not be protected by those kinds of regulations in any event.
Mais juste pour conclure,
just to conclude, that is a concern we all share. There is a point where anybody might end up in financial difficulty and need to use a credit card to buy food. And it would be better for the person to use the credit card rather than not eat. But information is an important factor. Why would it be a bad thing to provide people seeking credit with more information? How might that hinder the person's decision-making?
Bad thing.
merci.
Thank you.
Monsieur Garon.
Thank you, Mr. Garon. Mr. Messi.
Thank you, Mr. Chair, and to our witnesses here, and then if I get a quick one into Mrs. Lang or another time. We're just looking at Statistics Canada here. 90% of Canadians do have a credit card, so it's kind of consistent to even the consumer insolvency. But you're looking at their debt, and a vehicle lease or loan is a significant part of average debt, but that loan can be anywhere from 0% to 6 or 7% financing, depending upon the vehicle you have. Outstanding credit card balance is anywhere from 5% minimum is what I think I've seen the lowest, 5.5% on a credit card, to 20 to 30%. Personal line of credits, that's often actually used to help consolidate credit card debt from people. That's usually, anywhere between a couple points above prime, depending upon your relationship with your bank. Student loan is the other one where that's, again, in the smaller range of digits. I actually believe we shouldn't have any interest on student loans, but that's just a personal opinion. Mortgage on secondary residence is often usually lower than the interest rate range as well, even if it went up most recently. It's still been historically low. And then last is personal loan or other debt liability, which usually is, again, consolidation of debt to a smaller number than the credit card number on the interest rate. So I guess my question to you is if we don't get the buy now, pay later under some type of change, as you've noted with the increases of GST, shrinkage, and so forth, wouldn't it seem that we're maybe setting Canadians up for failure because there's really, if you don't pay for cash, you're going to pay some of the highest interest rates on food and other services from the only payment process you get, because you can't use your car loan to get your groceries, and you can't use your mortgage to get your groceries, but we're only giving them the one option, which is the credit card or through buy now, pay later.
Yeah, absolutely. I can answer first, and let Ms. Taylor answer. We have a debt culture problem in Canada. I think it's abundantly clear if you compare Canada with the U.S. To your point, I mean, that's really what we're facing right now.
Thank you. Just to add, we are seeing the BNPL being almost like a complement or a gateway to credit cards. Many BNPL, actually, the installments get paid with the credit card. So the unregulated fintech market with BNPL, it could be 0% interest and interest-free installments. There could be a fee baked into the installments. There could be NSF fees. There could be interest rates. There could be interest rates that go back at relatively punitive rates to the date that the purchase was made, even in the event of default. And if you buy something and then say like a purse and then you return it, if they don't receive the payment before or the return good, then the BNPL could still come into effect. So anyways, all that to say is understanding that it really could be the BNPL as a gateway to increased credit card debt and then, starting the snowball. So education matters would be great, not seeing it as free money and really ensuring the public are aware.
Yeah, and I know I'm out of time, but just one quick point on what you mentioned earlier, though, with this new apps and going after millennials and so forth. A lot of that's targeted so that they don't even do their own grocery shopping. That's done for them by something else, by a third party or whatever, and that's basically the TV ads are stay in the home, party with your friends, and then and get your groceries delivered to you, which also comes with buy now, pay later as the primary way of paying for these things. Thank you, Mr. Chair.
Merci beaucoup, Monsieur Massé. Madame Rempel-Garner, la parole.
Thank you, Ms. Massé. Ms. Rumpel-Garner.
Thank you, Chair. I'd like to use my time to move a motion that I hope we can dispose of quickly. I gave notice of it on Tuesday. So I move that following the testimony from banking executives, the Standing Committee on Industry and Technology encourages the Competition Bureau to investigate potential anti-competitive behavior in Canada's e-transfer ecosystem and, if deemed necessary, the broader electronic payment industry in general, and that the committee report its concerns to the House. I think I'll speak very briefly on this motion, Chair. I think we were all shocked by the testimony that happened earlier this week, where we had a financial executive who also serves on the Interact Board of Directors, who stated that there was, in fact, a tiered volume pricing system for Interact e-transfer fees that likely disadvantages smaller financial institutions and probably has, so that obviously has competition issues for new entrants into the market, potential new financial services companies, but also it has an impact on consumers. I think that the appropriate vehicle for this, especially given the Competition Bureau's new power, is to ask or encourage. I know that the Competition Bureau sets their own agenda. That's why I use the word encourage. It's sort of just a mark of multi-partisan concern on this issue. And I also would just note for precedent, earlier this year, the Minister of Industry did write to the Competition Bureau to look at the issue of digital wallets. So there is precedent for this. The word is encourage. And I just would like a show of unity within the committee here that we are all concerned about this behavior. It doesn't particularly deal with the government right now, but certainly I think a Competition Bureau review of the of this particular issue could provide some recommendations or findings for which we could legislate in the future. Thank you.
Merci beaucoup, Madame Rempel-Garner. J'ai Monsieur Massé.
Thank you, Mr. Rempel-Garner. I have Mr. Massé on my list.
This motion, and I appreciate my colleague bringing this forward, and I think it is appropriately worded. I've written a number of times to the Competition Bureau on different issues, and this has been done the proper way, and so I hope that we can get this passed, and thanks to the member for bringing this forward.
Merci beaucoup, Monsieur Garon.
Merci, Monsieur le Président. D'abord,
Mr. Garon, thank you to our colleague for moving this motion. There is a problem with competitiveness in Canada. There are monopolies, oligopolies, so we could basically move a motion like this for almost every sector in the economy, and that might improve productivity. But like my colleague, Mr. Massé, I think this is an appropriate motion, and we will support it as it stands.
C'est génial, mon Dieu, je suis fier de...
Great. I'm so proud of this committee. I would like to thank you, Ms. Rempel-Garner, for having moved this motion. I think it's excellent. Mr. Turnbull.
I think this is a relatively good motion. I have only one issue, which is the committee report its concerns to the House. I think we could get unanimous consent if we just remove that. So I would just propose an amendment, which is to just remove everything, or just say industry in general, period. And I think that's more than sufficient.
There's a proposed amendment by Mr. Turnbull that the motion ends at in general. Mr. Massé on the amendment.
Yeah, I don't support the amendment, sub-amendment, and the reason being, I think I understand the interest to do that. But this does allow us, though, to speak about this issue in the House. So depending on what we get, it'll give us more opportunity to discuss things in the chamber on this issue in particular. So that's the only concern about restricting or eliminating that component of it. So I see this also as a part of communication to Canadians and constituents about financial literacy and so forth with this. So that's why I have a concern with the amendment. I understand the reason for it, but that's why I don't think I can support that change.
Thank you, Mr. Massé. Monsieur Garon.
Mr. Garon. Thank you, Chair. When I read the motion originally, I was also concerned that at some point, once C-27 comes back, that this might hinder the work on C-27. But like our NDP colleague, I think we should be able to discuss it in the House. I'm very keen for this component to remain in the motion because it will bring the discussion to the House, because it will bring discussion on the motion to the House. The Conservatives need to break the deadlock in the House, so to help that along, I will support the motion as is. Thank you. Are there any others wishing to comment on Mr. Turnbull's amendment? That will have to be put to a vote. Madam Clerk.
Mr. Turnbull.
Yes.
Mr. Aria.
Yes.
Mr. Badaway.
Yes.
Mr. Gahir.
Yes.
Mr. Van Bynen.
Yes.
Mr. Perkins.
No.
No.
Monsieur Genevre.
No.
Mr. Patzer.
No.
Ms. Rempel-Garner.
No.
Mr. Garon.
No.
Mr. Massey.
No.
OK, donc l'amendement est rejeté.
The amendment is defeated.
Principal, sans.
And that brings us to the main motion, unamended. Does anyone wish to comment on it? Do I need to move to a vote, or do I have the committee's unanimous consent? I'm looking around the table.
I see general consensus on the motion. That was just an amendment. Thank you. The motion is adopted. Merci beaucoup, Mme Rempel-Garner. And you still...
Thank you, Ms. Rempel-Garner.
Vous pouvez poser des questions. Je cède mon temps à mon collègue, M. Perkins. Monsieur Charlebois, j'ai lu votre texte sur la sécurité alimentaire. Il y a certaines choses qui m'ont frappé en ce qui concerne les comportements des Canadiens. J'aimerais parler de certains nouveaux comportements. Vous avez des questions et des réponses sur l'inflation des prix alimentaires. On voit que seulement 6,3% des Canadiens disent ne pas avoir changé leur comportement. Et cela s'explique par plusieurs raisons. Certains, par exemple, cherchent les rabais en raison de l'inflation des prix alimentaires. Pouvez-vous nous en dire plus? C'est un pourcentage très faible, honnêtement. Nous suivons les prix alimentaires depuis une vingtaine d'années. Souvent, plusieurs Canadiens n'ont pas changé leur comportement jusqu'à tout récemment parce qu'ils cherchent des coupons, ils cherchent le crédit. Ils magasinent ailleurs. Si on regarde le tableau de bord à la page 3 du rapport dont vous parlez, pour moi, ça nous dit ce qui se passe avec les jeunes générations et leur façon d'acheter leurs aliments. Monsieur Massé, il a parlé des applications. Il y a une certaine idée selon laquelle dépenser pour s'alimenter, ça devrait être facile. Et c'est très prévalent chez les jeunes. Les ventes d'aliments au détail sont stables ou diminuent. Vous m'avez bien entendu. Malgré l'inflation, les ventes par personne chutent. Mais la consommation de services alimentaires, je parle ici de restaurants, augmente. Et qui utilise les applications de commande? Ce sont les jeunes, avec Uber Eats, par exemple. Et c'est inquiétant. Aujourd'hui, les ingrédients dépensent presque 187 $ par personne en services alimentaires par mois. Ce qu'on voit au fil des ans, chez les gens qui ont du mal à payer les aliments et qu'ils pensent, par exemple, qu'ils arrêtent de consommer des aliments frais, c'est que, par exemple, le fast-food et McDonald's, qui est beaucoup moins cher que d'aller à l'épicerie. Qu'en pensez-vous? Oui, dans certains cas, c'est ce qui se passe. Mais il faut ajouter les taxes à ça et les frais de livraison. C'est pour ça que cela m'inquiète. Comme les modes de dépenses, c'est inquiétant parce que je pense que les gens ne comprennent pas.
Things are costing at the grocery store. If you go to the grocery store, you're educating yourself in terms of the cost of living, feeding yourself and your family. If you're continuously use apps on credit often, you don't necessarily appreciate how much can you buy with the dollars you have.
So if I go to figure 6, I wonder if this has changed. So one of the shocking things in figure 6 is that, and maybe not surprising to people these days given food inflation, is that affordability is the biggest chunk of factors in making a decision on what to buy, 47.3%. And nutrition is only a little over 24% a primary reason. Has that changed in the last few years? Have we seen an increase, a flip
No, but the gap between the two has increased. Because right now, I mean, affordability is at 47%, and nutrition, which is second, it's at 24%. We've never seen such a gap. The next time, our next report is in April, so we'll see exactly how things are changing in Canada. But right now, that gap is incredibly high. And so, in other words, what's going on at the retail store is that a lot of people are making nutritional compromises. They're going to the center of the store, and they're leaving the periphery of the store where the fresh products are.
And then in your figure 5, which you referred to earlier, which was boring, dipping into your savings, which isn't meant to buy food or everyday essentials, and borrowing for food is higher and higher when you go to generation. It's higher with the younger generation. So the few great generation that are left is the smallest at 13%. But when you get down to Gen Z, 46% of Gen Z are taking whatever little savings or borrowing money to actually pay for food. Have you seen a gradual, maybe not so gradual change in those numbers?
So that percentage is increasing. Again, we'll see in April if that has increased even more. But when you actually start to unpack the data that we accumulated for this particular report, you're really noticing that the younger generations aren't necessarily aware of how powerful their dollars are, how much they can buy. They don't necessarily understand exactly how inflation has impacted their buying power. And if you buy through credit, you're severely impacted. Your perception is severely impacted as a result.
So what about the perception? Does perception of what's happening in food prices, there's a lot of talk out there, does that affect people's behavior, or is it just the reality?
Last year, it's a good question. Last year, we surveyed Canadians, 9,000 Canadians, asking them in the last 5 years, since March 2020, COVID, how much more food prices have gone up without telling them, and the average answer was 78%.
Wow.
The
They're buying a lot of olive oil.
And baby formula. But the truth is 24%. So perceptions are absolutely impacting behavior, because there's a lot of people are saying, "Oh my goodness, food prices have tripled." That's not true. There's no evidence of that. But people, what that means essentially is that people feel the pain. That pain is real.
Right. Absolutely. Thank you.
Just a quick question, a follow-up on olive oil. One thing I've noticed at the grocery store is that now you'll see next to olive oil like a lot of canola oil and seed oils, which are arguably not as good, not as healthy as olive oil. So have you witnessed a change? Certainly there is a change if groceries put these other substitutes or other products next to olive oil, they know there's demand for it. But you were talking about shrinkflation. Have you noticed also a change in the quality of products that's offered? Like companies going for cheaper products in how they prepare the products that they're selling?
Well, yes, there is some substitution happening for sure. In vegetable oil, there are many other options out there. And so when olive oil becomes too expensive, they will actually look at other options. There are other options than canola oil. But the one thing that concerns us very much is food fraud, especially with everything liquid at the grocery store. It can be adulterated very easily. And olive oil is a huge target. Right now, we're working with some colleagues out of Greece, and they believe that 20% of all olive oil in Europe is adulterated right now because of higher olive oil prices. We don't know the answer here in Canada because we're not testing.
Yeah, just as an aside, il y avait un reportage dernièrement à Radio-Canada qui...
There was recently a feature on Radio-Canada showing that bolognese sauce sold in groceries contained only a fractional amount of meat, 1 or 2 grams in a full can, when in fact it's being sold as bolognese sauce. If you want a sauce that has some amount of meat, you're paying $16-ish instead. Well, there's a lot of concerns about shrinkflation, but the problem is also adulteration, because by putting canola oil into olive oil, you end up with an allergen. It's not just a socioeconomic, but also a public health issue. And you think this isn't being monitored appropriately? No, it's not. Everyone here has been a victim of food fraud in the past month, including myself, without knowing it. I can guarantee it. Sometimes, my mother didn't tell me exactly what she was putting into my meals. I had to eat it anyway for my health. Thank you, Mr. Charlebois. Mr. Turnbull.
Merci, Chair. Ms. Lang, I'm going to start with you. Thanks for being here today. I want to go back to your opening statement, because I sort of was connecting all of the stats that you put out quite quickly, which I think are very helpful for us. And so I can go back in the record and look at exactly what you said. But I just want to make sure that I interpreted you correctly. I think what I heard you say is that credit card caused insolvencies as self-reported, and you said it's not perfect because you said it's an open field on your website, I guess, that it hasn't worsened significantly as a percentage of the overall insolvencies in Canada. Is that true?
Yeah, that's right. It stayed under 1% compared to, what was my comparison year? 2019?
Yeah, and then you also referenced the 2008 recession and said that it was actually higher during that time. Given the fact that we've just gone through a once-in-a-100-year public health crisis that was pretty significant in terms of its economic impact, sending tremors through, I think, the global economy and causing all kinds of effects, supply-side shocks, perhaps demand-side shocks that rippled through. Do you see that the fact that insolvencies haven't significantly increased, they've actually decreased in comparison to the recession in 2008? Do you see that as almost a sign that we're doing relatively well? I'm not saying that any amount of insolvency is good. Of course it's not. But it is a reality, and I'm just trying to get perspective here in terms of a historical perspective. So if you compare back to the recession of 2008, we're less today, but we've just gone through a massive global public health crisis that had major impacts on the global economy. So can you put that in perspective a bit?
It's hard to say what it signifies, but I think generally we expect the numbers to continue to kind of climb back up to 2019 rates. I doubt we'll see the 2009 recessionary rates unless we hit another significant recession. But there's not really any explanation why we wouldn't get back to 2019, possibly slightly above, given the increase in our population.
Okay, thank you. Mr. Charlebois, I want to ask you some questions. I note that I was on the Agri-Food Standing Committee, and you appeared quite a number of times, so great to have you here at INDU. The Bank of Canada governor has said recently that climate change continues to be the main driver of food price volatility, which is kind of interesting because you also kind of indicated that today as well, to some degree, that global commodity price volatility is caused by climate change. And you've estimated that there would be another, that companies would be forced in a way to review their cost structure, and that you anticipate another wave of shrinkflation in the future. So, but I wanted to ask you, in the work that you do at the Agri-Food Lab, have you done a study? Has your organization done a study on what is well regarded by some experts, including yourself, I think here today, that food price volatility is being led by or caused by climate change? So have you done a study on that?
So short answer is no. But I would agree with the governor. I do think that price volatility is probably the most significant challenge for consumers beyond food inflation itself. That is something we did study. As soon as prices are volatile, you will push away consumers for a very long time. It happened to beef in 2014, 2015. It's going to happen again. It's happening again right now, by the way. Beef prices, because of climate change, beef prices, the North American herd has dropped significantly because it costs more to feed cattle. And prices are pretty interesting now, so a lot of people are exiting. A lot of cattle producers are exiting the industry. So inventories are extremely low. So that indirectly is linked to climate change. But beef prices will remain high until probably the end of 2025 due to climate change, and that's going to push consumers away from that category, unfortunately. We've seen it. Every time prices of fruits and vegetables, meat, very volatile, pushes consumers away, and they end up at the center of the grocery store where products are not necessarily as nutritional.
I know that when I shop around the perimeter, just saying that I'm understanding of the nutritional density, and preparing your own food is certainly how I choose to eat, but every Canadian has their own choices to make. But I'm sort of interested in, the fact that, you've said, you've made comments fairly regularly about carbon pricing. And I disagree with you strongly, but I want to just tease out some of the things that I've heard and connecting these things together and sort of put a question to you. So, like in February of this year, the Bank of Canada governor stated at another committee that at $15 per ton, annual increases in carbon pricing raise the average economy-wide price level by 0.1 percentage points. I would argue that is a relatively small amount. It's not insignificant, but it's pretty small. Would it even show up on CPI calculations? I'm not sure. Trevor Tome, who I think you probably know of, economist at the University of Calgary, has said that the current cost of carbon pricing would be about 0.15%. So that's 15 cents on a $100 spend at the grocery store. He then traced it through the supply chain and said it might be as much as about 30 cents on a $100 spend. So that's relatively small. Like when I hear the Conservatives wailing and screaming about this, it sounds like it's the end of the world, like it's $50 on a $100 grocery bill, to be honest, like the way they make it sound. So to me, I'm a fact-based person here. I'm trying to understand what's the real impact. The other thing I want to say is the European Central Bank did a study, and they said that higher temperatures alone will push up worldwide food prices by between 0.9% and 3.2% every year. That's way higher. So what I'm trying to say is, isn't the cost of climate change, the impact it has on our food prices, significantly higher, like 20 to 30 times higher, by my really gross calculation, than the carbon price? Over to you.
Yes. So, first of all, I've looked at Professor Toombs' study, and I've looked at the calculations used by the Bank of Canada, and I've actually made some comments publicly about how shallow the Bank of Canada's calculations were. They only looked at three components of the CPI. I want to register that very quickly. And Professor Toombs' analysis, he uses statistics from the social science depository that is available to all of us, to you, to me, and that data is not clear. Again, I've said that earlier. To correlate the carbon tax policy with retail prices is dangerous, because you have to base it on several weak assumptions. And that's what Professor Toombs did. And I did say that, and I actually sent an email to him about this. Now, I'm not against the carbon pricing at all, by the way. I actually am supportive of it. But we also need to...
That's news to me, so thank you.
But, and I was in Saskatchewan last week to talk about this, and I do believe that carbon is a tremendous opportunity for the agri-food sector. But the carbon tax itself appears to be a policy driven by the idea that we can change the weather. We have to see this as an opportunity to grow the industry in a sustainable way. That's where we disagree.
Perhaps, but even if, so you've said numerous times that making the calculations on the true cost of carbon pricing is challenging. You've challenged some of the assumptions with Trevor Toom and others that have tried to calculate the cost along the supply chain in the agri-food system. You yourself have not been able to calculate that to prove those assumptions false, although you say that they're somewhat shallow, right? I mean, you've said that here today. And that's fine. So I don't want to disagree with that. So even if it's 40 cents on a $100 grocery bill, okay, 300 economists at least have said that they agree. Even the parliamentary budget officer, I've had meetings with him, and he says he's a fan of carbon pricing. Like, carbon pricing is the most cost-effective way to address climate change. So, and you're agreeing that climate change is the biggest driver of food price volatility or commodity price volatility, which has an effect on food prices. So you're agreeing in a way that we have to address climate change if we're going to address food price inflation. Do you not agree with that?
I absolutely agree.
But do you agree with addressing it with the most cost-effective mechanism that anyone has ever been able to come up with?
The most effective one to increase competitiveness, but I don't believe that's the carbon tax.
So you don't believe the carbon tax is a cost-effective
I don't think
means?
it's the best way to do it.
And what would be better?
So my preference would be cap and trade.
Cap and trade.
Yes.
Okay. So we had that in Ontario, and unfortunately, the
we had it in Nova
government.
Scotia. We had it in Nova Scotia.
Yeah. So okay, fine. So we'll agree to.
Markets are an incredible opportunity for the agri-food sector, and I do believe that by using credits, we can actually decarbonize the economy, which is essential to address climate change.
Thank you. Can I, Chair? Do I have a little bit more time? I know you've been lenient with time a bit.
Yes.
Yeah. Okay. So I also want to ask you about net revenue losses, because my understanding is the net revenue losses in the agri-food system due to climate change have been projected to be extremely high. So Agri-Food Canada was projecting net revenue losses of 49.2% in 2023 for Quebec farmers. That's a significant amount. Like, we're not talking about 2 or 1% here. We're talking 49.2%. So, and 86.5% in 2024. So isn't it true, and I mean the Canadian Climate Institute says they've projected that in year 2025, so essentially this year coming up, that the losses for Canada's economy due to climate change would be $25 billion a year, and that number would triple or quadruple by mid-century. So I guess what I'm saying is, isn't the cost of the impacts of climate change on our economy and on our farmers and their crop yields so significant that we can't afford to not address climate change?
Turnbull, there's nothing you've said I disagree with. I agree with your statement. Yeah, climate change is our agri-food sector's greatest challenge, and we need to address it. It's just I don't think we agree on how to do that.
Perhaps that's true, but so the last point I'm going to make here is, in terms of global competitiveness, we know that the EU and the United States, depending on how the election turns out, will likely have in place carbon border adjustments. This impacts our trade with two of the biggest trading partners that we have in the world, I would argue. So how is Canada going to remain competitive if our agri-food system is going to be subject to high tariffs for not keeping up with the standard of greening our food system and the products that we produce?
That's really the last question, Mr. Shaw.
Thank you, Mr. Chair. To remain consistent with my testimony, I did say that decarbonizing the agri-food industry should remain a priority to remain competitive, to address the exact issue you just mentioned.
Before I go to Mr. Généreux, just a quick question. Have you ever looked into the impact that an increase in the money supply can have on the price of food? Because I'm just looking at the Bank of the Federal Reserve's branch at the Bank of St. Louis, the price of eggs in the U.S., and you can see that during the great financial crisis of 2008, it rises right after the pandemic, after we've increased the money supply by about 40% across the Western world. It rises a lot, and I'm just trying to understand if that is it just a correlation without causation, or is there a causation? Is this something you've ever looked into?
No, it's a good question. So money supplies will impact inflation. I think we all know that. With food inflation in particular, there is a lag, but it does impact eventually food prices indirectly. Yeah.
Thank you. Monsieur Généreux, la parole est à vous. Et là, je vais...
Mr. Généreux, the floor is yours, and I'm going to be a little bit more strict about time because we have only 15 minutes and we still have Mr. Badaway and others to take the floor. Mr. Généreux. Mr. Charlebois, after the article I read this morning in La Presse, I don't think we're going to be finding it as easy to have steak, if I understand correctly. We are a significant beef producer, Canada that is, so why is there such a drop in production since demand is still greater than supply? It was very interesting. My question is for Ms. Lang, if I may. I've been using my friend ChatGPT to get some data, actually data coming from you. But what I found surprising is that it tells me that there's a significant increase, not just in bankruptcies, but many more agreements between credit card issuers and or banks. Are you seeing a trend? Are people coming to agreements through consumer proposals with banks or credit card companies? People are getting into a lot of debt and in the end come to an agreement to pay only 10 to 20% by submitting a consumer proposal. And this could keep happening. The cycle can start again. Do you see a problem there? Or is this just what we've been seeing over the past 2 years? Thank you for the question.
Increase in consumer proposals is generally a good thing. It means that people are able to offer a bit more to their creditors. Active creditors can play a role in determining whether that amount is reasonable or not. We don't always have active creditors. I think your question is whether it will become a vicious cycle of repeat insolvencies. Over the years that we've tracked that, we have not seen a significant increase in repeat insolvencies, but it's definitely something that we should be keeping an eye on.
OK, donc ce que je comprends bien, parce que
I'm referring to what Mr. Charlebois was saying, especially concerning buy now, pay later. I understand there are fewer guarantees for credit cards. Interest rates are higher. There's a higher risk for young people in particular because it is they who are making greater use of BNPL to buy food. They can stretch out their payments over several months. And this is having an impact. There's less protection, interest rates are higher, and that could lead to a vicious cycle where young people keep thinking that it doesn't matter if they get into debt because they can just come to an agreement with a bank or with a credit card company.
As I say, we will keep a close eye on it. We have not seen that pattern. In Canada, most people do not enter into an insolvency lightly. It still comes with very serious consequences in terms of your credit rating, which lasts a long time. So at this point, I'm not worried about it, but it is something to keep an eye on, most certainly.
Monsieur Charlebois, Madame Taylor.
Mr. Charlebois, Ms. Taylor. I didn't even know that I could eat now and pay later. the credit used in that is not the same kind as what you get with a credit card. I've really never done that. I just pay for food immediately. Even if I put it on my credit card, I pay off the card 2-3 days later. I just want the points, like many people do. So are young people thinking differently? Is their attitude different?
Thank you. Younger people, again, they're influenced by social media disproportionately so than older generations. Finfluencers are a particular kind of financial influencer available on TikTok and Instagram and whatnot. And their primary motivations are to provide entertainment and to make money for themselves, not to educate their viewers. So with that being said, hearing, oh, well, it's basically free when you're buying something, it reduces the friction. So the availability of information to the targeted primarily at younger generations could likely have a significant impact kind of down the line.
Monsieur Charlebois, je vais changer de...
Mr. Charlebois, I'll change topic and come back to what Mr. Turnbull was talking about. The carbon tax applies to producers making food, shippers shipping food, retailers selling food. In Quebec, there is a cap-and-trade system, so it doesn't apply there. But I'm not done with my question, Jean-Denis. There is an impact nonetheless in Quebec. The carbon tax does have an impact in Quebec. Well, I think the cap-and-trade model rewards companies that do well, act sustainably, and penalize polluters. The cap-and-trade system allows people to see carbon as an opportunity. For me, there's an excellent rationale for it, and I believe Quebec is ahead of the game on this. I have contact with a lot of agri-food companies across Canada. Many of them are concerned about the carbon tax. But in Quebec, not many are. I understand that, but what I'm trying to make you say is that in Quebec, in spite of the fact the carbon tax doesn't apply directly, because we do have a cap-and-trade system, there is a carbon tax in the rest of Canada. We don't produce all the food that we use in Quebec, so we import food from elsewhere in Canada. We produce a lot of milk, but there's more beef in Alberta, and we eat steaks too. So, do those costs, does the carbon tax outside Quebec have an impact on Quebec consumers? When it comes to inputs, potentially. But once again, it's very difficult to just look at one coefficient associated with one policy upstream. But it's possible. Thank you, Mr. Généreux. Your time is up. Mr. Badaway.
Mr. Chairman, thank you, Mr. Chairman. I've been in the food business for over 40 years, pretty well my entire life, and recognized quickly as a 10, a 12, a 15, a 25, a 30, and 40-year-old that what impacts food prices most is weather. And with that, climate change is a big part of that. Mind you, added value foods, whether it's prepared or whether it's any food for that matter that has any value added to it, the margins are much higher. And frankly, that's where your increases come from, period. And therefore, we have to, as Mr. Turnbull alluded to earlier, buy smart. And I see a lot of consumers starting to do that now, and therefore, the cost of the foods that they're buying are starting to level off because of the smart buying. But I want to go back to what we're actually studying here, and that's credit cards. And primarily today's meeting with Ms. Lang here is credit card debt. And so, Ms. Lang, I really want to concentrate on you with respect to trying to mitigate some of the challenges that our residents are going through right now, more so in a proactive approach. So my first question to you is what role does your office play in preemptively assisting Canadians who may face financial difficulties in the future, especially related to credit card debt? Do you have any approaches, any proactive approaches or outreach that you would embark on, or any awareness campaigns that your organization would actually embark on to be proactive so folks don't get into this position in the first place?
So I mentioned our consumer awareness campaign that includes a multi-pronged approach and collaborating with many partners to get the word out to Canadians about the various options to deal with their debt. So one of those is to target you when you're starting to sort of feel the pinch. And unfortunately, a lot of Canadians don't sort of act proactively to deal with these problems, and it can cause a lot of stress, mental health issues. But if they do, they can find excellent resources to budget, understand credit products, deal with them better. So we're really trying to get the word out, and we work collaboratively with FCAC, with licensed insolvency trustees, everybody that's willing to sort of spread the word through various channels, including social media. We will partner with to help Canadians find those solutions.
And, you know, this may not be your area of expertise or the business that you do on a daily basis, but would there be an opportunity to inject into the system a discipline, someone taking on the responsibility, such as credit card companies, for example, that would prompt a service to those individuals that would be anticipated to get into those areas of concern?
Yeah, one thing I know from talking to my international colleagues is that other countries, such as the UK, do a better job funding financial counseling. So it's more of a charitable industry compared to Canada, where even if it's called not-for-profit, that's just a tax treatment. They're often charging and selling products. So whether it be through creditors or through the industry that already exists, I believe that we could do a better job of funding that to help Canadians.
Okay.
Thank you, Mr. Badaway. Monsieur Garon.
Merci, Monsieur.
Thank you, Chair. I understand from the previous rounds that you were concerned about the quality and quantity of meat in bolognese. I have a good friend who probably has the best possible recipe. I'm going to ask him to forward the sauce recipe to the clerk. So when we prepare the committee report, we can have a good recipe for bolognese sauce in it for our chair, who has a growing family. And there are times in one's life when you need to have good habits. Well, given the price of baby formula, I'm sure it'll check. I'm sure it'll serve. This is a very altruistic comment, Mr. Chairman. Mr. Charlebois, earlier in one of your comments, you talked about the price increases at retailers in Canada. You said that in the States there's a bit more margins. So when there are fluctuations in the price of inputs, a chain like Walmart doesn't necessarily have to raise prices to maintain its profit margin. In Canada, these margins are narrower, so fluctuations of price and inputs are passed on to the consumers more quickly. So coming back to the credit card study, there's a whole issue of determining whether exchange increases in exchange rates are going to be passed on to the consumers, and if that would have led to a price drop, will that be passed on to consumers, or will the grocery chain pocket it? There will be fluctuations in the price of inputs over 2 or 3 years. So could there be a way of reducing price increases? To what extent can we criticize a grocery store for not adjusting prices immediately when input prices effectively drop? That's a hypothetical question, yes, but what we've been seeing over the past 5 years is that gross margins have remained approximately the same for the 3 main chains, Empire, Sobeys, and Loblaws, and Metro. If fees were reduced, grocery chains might pocket the difference. The agri-food sector has very narrow profit margins. So when they can find an opportunity somewhere, they'll use it. Do you have an assessment, since you've been studying the price structure of grocery chains and how prices change with input prices? Have you had a chance to see what impact things like credit card rates have on the operating costs of a grocery chain? Are changes in operating costs that significant as a part of total cost? We've never assessed that as a separate portion, but it is not the largest. We know that it's the bricks and mortar that cost the most, along with salaries and the cost of stock. We don't know what the percentage of operating costs really is. Thank you, Mr. Garon. Mr. Massé, the last word is yours.
It was this fascinating discussion of cap and trade and carbon tax, which we now have because of the Conservatives in Ontario, and thanks to a $2 billion bill with it. But that's not what I want to get on about as we finish this part. I want to really bring it back to the fact that, again, food and purchasing is now going on payment systems in the future and so forth. And one of the things that's changing in the grocery store sector, and I was hoping you could highlight if there's been much study on this, they're offering to do their own shopping for customers now. And in there, their advertising hasn't been consistent with regards to food pricing. So some of those, and also some of them have fees or deposits that are required to be part of that as well too. And then what I've noticed, and I don't know, maybe there's some good stats on this or maybe it's too early yet, is it seems that persons that are seniors, people with disabilities and so forth might use those services more. And if that's an increased cost, and almost all those you don't pay cash for. They're all delivery services that go onto, again, and that's, so what accountability or measures are there in that system? Because if we're also, the retailers are now encouraging more practices to move that, if it has different pricing, it has different costs for doing it, and then you're using the systems that put you into the higher bracket of borrowing again, should there be more truth in advertising to this? Should there be the service just for regular costs, the cost of doing business that's rolled into the whole model, especially if it's using seniors, people with disabilities as a primary target for that? And I think some of this is also a response to those other independent, like Uber Eats and the other types of ones that are they're getting into that market too. So I can understand why they're creating a system there, because the third parties are using access to their system, and why not have their own system? But again, I've run into issues where there hasn't been, I think, is the most overt transparency with regards to the cost of using that service.
Very good point, Mr. Massé. Right now, 3.6% of all food sales in Canada are done online. Before COVID, it was 1.9%. We believe that within the next 2 years, we could reach 4.5%. And that percentage is driven by people staying at home, seniors. Provinces are pushing people to stay home longer instead of going into seniors' home, for example, which will get them to buy more food online. So to your point, I do think that there is going to be a growing number of people who may not understand the true cost of getting food delivered on credit at their homes.
Okay, yeah, that's very helpful, because that's kind of, if we're shifting, and even through, and that's a good notation, actually, the government encouraging people to stay at home is a public policy we're really building our healthcare models for, but the result of that, though, is increasing vulnerability for the purchasing systems that are available for them.
Yep.
Okay, thank you very much for the testimony, and thank you, Mr.
Merci,
Chair.
Monsieur Massé. Ça conclut cette
Thank you, Mr. Massé, and that concludes this meeting of the Industry Committee. Thank you very much, Ms. Lang, Professor Taylor, and Professor Charlebois for having been with us this morning. It's been very interesting, and I wish you an excellent day. Thank you to the interpreters and all support personnel.